Welcome back, everybody. Sive here with the ForexPeaceArmy.com. Let's update our view on euro currency. So yesterday we said that market stands around the level where we could get bullish pullback, which is because it's rather strong support, so we're sold, confidence support, and previous top here. And from the statistical point of view, this is kind of an area where pullbacks happens relatively often, especially after the so strong upward action. But currently, the situation is changing almost every hour, since things that we see currently on the charts, on the Forex, on the dollar index, it's not the product of the particular of these assets. It's not the product of the euro or not the product of directly the dollar. This is the product of the collapse on the markets that we see. So, for instance, you can see that Bitcoin is near 70. Stock markets has dropped on an average on the 2%, but if you take a look gradually, carefully on particular assets, you can see that high-tech stocks yesterday has dropped somewhere around 4%. Some has dropped for almost 8%. So I made the post in a Telegram channel with this information. And in such circumstances, it is normal when investors need cash. They need to fulfill the margin obligations. They need to pull up the high to pull up the margin level on the initial level. So and that makes a pressure on currencies. So there's some demand. It is careful demand. We do not see some actually explosive demand, but still it is gradual and it's constant. Second issue is, of course, the Iran. So this was initial information that negotiations have been postponed. Now information that they still will meet in Amman for discussion, and this tension still stands on the table. That also could make pressure and support the dollar. From that standpoint of view, on the euro currency, we do not have yet any significant breakout, so we could see that markets gradually moving lower here, but we do not have the breakout of these lows. But the way how it is happening, well, it brings some concern. So first of all, since market stands in flat action with this MACD indicator, it starts reminding kind of the bearish dynamic pressure. It stands flat without no significant pullback. We do not see any activity of the bulls around, so it's very gradual and slow. Mostly reminds kind of the retracement type of action. Second, in the first glance, you could see that we could get the double repo. Theoretically, it might happen, and with the grabber on the bottom, markets coming close to the MACD. So within the few hours, theoretical grabber also might be formed here. But with the double repo on the 4-time frame chart, it looks nice. So good for us, close above the 3x3 moving average, close below. And maybe we could get some relief here and market trying to upward action. But what I do not like too much is the way how market performs on the hourly chart. I do not see here any attempt of the bears to break the bullish activity. So usually what double repo means? It means that first pullback, bears treat as just retracement and taking short position trying to break the lows. When they will fail, bulls take control of the market and real action of the double repo starts. So in fact, this is the failure of the bears to push price below under the existing lows. Currently, I do not see any activity and efforts to push the price. So it's gradually moving lower without any really active performance. So it's very gradual. That's what we have here. On the cross-market analysis, the grabber that we discussed yesterday has been formed on the dollar index now stands under question, because you can see the market right now stands above the top of this grabber. Finally, if you take a look at the Great British Pound on the daily chart, first, we haven't got any grabber yesterday, so market reversed down and actually has formed bearish reversal session. You can see here, so trend in fact has turned bearish. So we do not have anything of this kind. And on lower time frame, you could see that actually it's moving relatively fast to the downside. Taking it all together, I think that we need to put on the pause our plan for taking a long position for now. So because risks are rising currently, and performance doesn't correspond to the setup that we discussed yesterday. And from that standpoint of view, it would be better to wait for confirmation. I don't know, maybe kind of the grabber appearing or double repo pattern when you would see some really signs of rusting on lower time frames that market indeed turns up. If this will not happen, it could keep going lower, at least to the XOP target, then we will see what will happen. So on the daily chart, it will be action lower and maybe even to the 618 support. But first, we'll consider the XOP target and see what will happen next. That's a few things on a few suggestions on the current situation. On the euro currency, situation is not as on the cable, it is more gradual. You can see that mostly market stands flat, but as I said, taking in consideration all this cross-market stuff, it would be better to wait a bit and see what will happen, because market performs not as bullish as we would like to see it. At least to see what will happen with the flirting with the MACD, whether we will get grabber, whether we will get confirmation of the double repo, because to confirm the double repo, actually, to enter with this pattern, you need to get the second close above the 3x3. So market actually should return right back up and close above the 3x3. In this case, at least we will get something. But for now, I think let's better wait a bit and see what will happen.